I'm Charlotte McLeod with the Investing News Network, and here today with me is Nick Santiago, President, CEO, and Chief Market Strategist at InTheMoneyStocks.com. Thank you so much for joining me online once again. Great to see you.
It's great to be back. Thank you for having me.
Yeah, I'm really excited to talk to you. It's been about 12 months since the last time that we had a chance to speak. And I'm going to start by going over something that you said last time. At the beginning of 2021, you told us that volatility would be the trade of 2021. And now, just a few weeks into 2022, we're really seeing, I think, that volatility rear its head in the market. So let's start there. What's going on with volatility? And is that going to be something that continues into this year?
I think it is going to be something that continues at least in through the first half of this year. Last year, we had it in the beginning of the year as well. And then we had, starts and fits of volatility. But this year, the markets have really gotten very, very volatile, as you know, as the S&P has come under pressure and NASDAQ has completely rolled over. So I think we're going to see high levels of volatility throughout at least the first half of the year, probably the first 3 quarters of the year. But it's going to be a trader's market going forward. It's not going to be just a one-way street. Obviously, the central bankers right now are starting to remove liquidity instead of quantitative easing. They're actually doing a quantitative tightening, and the markets are throwing a little bit of a temper tantrum at the moment. So that probably is likely to continue. But again, there'll be trading opportunities both on the long and short side as nothing goes down in a straight line.
Yeah, and maybe you can give me a little bit more of a sense of how you are approaching this as a trader in the market.
Well, as a trader, I'm always looking for signs that the markets are going to turn, whether it's going to turn up or turn down. Right around November 22nd, I had issued an alert to my members saying, hey, I think technology is about to top. Once we get into the winter solstice, I think the S&P will top. And both of those turned out to be pretty good. We've had some really good falls in the market, but now I would think that we're so oversold. We're due for a short-term bounce. So I'm looking for that now. But I do think that the volatility will continue and the markets after a bounce could resume to the downside once again. And it could be pretty sharp, especially if the central bankers signal that, they're basically out of the support the market game and they have to raise rates. And once that happens, there's really no other game in town. You'll probably start to see more selling as we go into the first quarter.
Yeah, and we are expecting to hear from the Fed this week. Today is Tuesday, and we have the first FOMC meeting of the year this week. I think we will hear from them tomorrow. Do you have any sense of, what we can expect from that? Are there things that you're thinking that we'll hear?
Yeah, I think this time around, every time the market has sold off, the Fed has come to the rescue. They basically, if you remember in December of 2018, the market was down about 20%. And Fed Chairman Powell basically went and cut rates 3 times. He, started a quantitative easing program, buying $120 billion worth of U.S. Treasuries and mortgage-backed securities. This time around, he don't have that luxury. Inflation is reared its ugly head, and that now has become a major problem for the Fed. So in my opinion, the central banks are in a box. I also believe the European bond market is destroyed. They've wrecked it over there. So everybody's hoping that the Fed will come to the rescue, but I don't think the Fed can do a whole lot right now. I think they kind of are handcuffed. Maybe they could jawbone a little bit. That seems to be one of their main tools in their toolbox. They'll tell you something and then do the opposite. But this time around, I think that the Fed actually has to look to end its quantitative easing, and it really needs to start to raise rates. I mean, if you just look at where a 2-year Treasury note is, that's kind of where, the Fed funds rate needs to be. And, that's over 1% now. So they are definitely behind the curve, and they have a problem right now.
Yeah, and a lot of people have been telling me this. They're in a box, they're behind the curve. There's very little choices that the Fed has right now. So as they move forward and they make these hard choices, how do you think the market will react? How does what we're seeing already now kind of translate into what we may see in the future?
Well, depending on actually what they do, the market will try to market's always forward looking. It doesn't look in the rear view mirror. It never really looks at what the Fed is actually doing. It looks at what they perceive the Fed to do in the future. So the market's always forward looking. It's not a rear view mirror mechanism. So I think if the market starts to pencil in, 4 rate hikes or 5 rate hikes or 6 rate hikes, I think it's very, very problematic, first for technology. And then down the road, if we get an inverted yield curve, it's very bad for the financials as well. And it probably signals that the US will go into a recession. So there are a lot of problems here. I don't know how Fed Chairman Powell is going to navigate these waters, but he created this problem. It's not something that was, not foreseen by anybody. Anybody that's been in this business for any amount of time knew this would eventually happen. And, you got to pay the piper sometimes, and that means equity prices will go lower.
It's true. It is something that we've been talking about for quite a long time. And I'm going to move you now over to gold, which is a topic that our audience loves here, of course. And we've had quite a few people asking if you could come back. And of course, we had to bring you back to learn your updated thoughts on gold. I think the reason that people want to hear from you is that you have, at least in the near term, a little bit of a less positive view than most of the people that I end up talking to about gold. So just to start off, I want to talk briefly about 2021 and get your thoughts on gold in 2021, if it performed as you expected last year.
So gold in 2021, at times it performed as expected. And then we had some really big sell-offs around the quarterly options expiration. So if you go back to quadruple witching in June of 2021, major sell-off. Again, I believe in September, a major sell-off. So right now, gold was talking to us back then, and it was telling us that the equity markets are going to come. It's always forward-looking. Gold's a great forecaster, and it was just telling us the equity markets were going to come under problems in 2022, and they started, late in the year. Very, very poor Santa Claus rally, and obviously no January effect whatsoever. So the markets came under pressure. But gold was telling us that. Right now, I think gold is a little bit short-term bullish just because there's a fear trade out there. But overall, I think gold is going to make another pretty substantial decline. And so right now, I have upside targets on gold futures to around 1870. I think that's kind of where it goes. Silver could possibly reach 26. I don't think it goes any further than that. And then I do think we're going to start another down leg for gold. But here's the good news for everybody out there that is a gold bug. When gold gets down to around 1,500 an ounce on the futures, maybe 1,450, I think that is going to be like a 1999 gold buying moment. And that's what I'm waiting for. And when it does get down to that level, that low, I'm going to really go heavy into gold again. Now, full disclosure, I own every single ounce of gold and silver that I've ever bought. I've never sold a single ounce, and I've been a buyer since 2003. So I believe you're going to get that kind of opportunity. And I do think gold will have its day in the sun finally. But the chart pattern right now suggests, yeah, you'll get a pop maybe to around 1870, 1872, maybe 1875 on the futures. I don't see it going higher than that. And then I do think we're going to probably see gold fall one more time. But like I said, it should lead to a major, major opportunity on the long side if you get gold around that 1,500, excuse me, 1,450 level. I think it should just be an excellent opportunity.
Okay, and that 1450 to 1870 range, is that all happening in 2022? What are your thoughts there?
I think a lot of it will happen in 2022. I really do. So, within the next 12 to 18 months, I think this all takes place. And when gold gets down to that level, it's hard always to work out the timing so specifically. Sometimes you got great timing models. Other times gold is tricky and it doesn't play along as expected. But for the most part, the levels should be good. The ranges should be good. So more so than time, I'm actually going to just go off of that price level, as I think that's what will work and make investors money.
Okay, perfect. And I think that those who follow you will know you take a very charts-based approach to what you're looking at when you look at the market. So I wondered if you could talk a little bit more about the signals that you're seeing that tell us that gold will be trading in this range most likely in 2022. So I always find it so interesting that, different people can look at the charts and see different things. So maybe you could tell us what you're seeing there.
Yeah, so I use charts. Basically, I'll look at all different time frames. So one of the most important time frames that I like to watch is a monthly chart. A lot of people will discard that and they'll stay a little bit narrow-minded and they'll stick with the daily chart and that's all they'll key off of. But I like to look at the dailies, the weeklies, the monthlies. I like to calculate time. I like to calculate price. Those are kind of my methods that I've adopted over the years. And it's not perfect, but it's pretty good. And right now, when I look at that monthly chart, I just don't see a good picture there for a long-term bull run. I see another dip first, and then I think after that dip, everybody will get bearish in gold, and that's when gold presents a great buying opportunity. I always like to make things real simple, but when everybody loves something and they're all on one side of the boat, I'm the guy that's going to the other side of the boat and I'm going to get the life jacket just in case that boat turns over. And right now, you get that sense or that feeling that everybody loves gold at this point in time. So I would be a little bit careful. I do think it has upside potential on the daily chart, and that means for days, maybe a few weeks. But overall, on the monthly chart, it's a bearish picture at the moment, and we should experience one more severe down leg. And once that happens, we'll fulfill that downside pattern at around 1,500, maybe 1,450. And that's where you'll get your golden goose buying opportunity.
Right. And as we look forward, beyond this year, do you have a gold price target that you're looking at for the much further out future?
A lot higher than the recent all-time highs. I think when you get the next breakout, just the map of symmetry probably puts you at 2,500 to maybe 3,000. And once something takes off and it breaks out of a prior peak, depending on how you get through that prior peak, the run could be substantial. I know in the past we've heard people talk about 5,000, 6,000 gold. I don't think that's crazy. I think that is certainly in the cards and a possibility, but I could never go out on a limb and say that's where it's going to go for certain until you get through one high and then you have to calculate it. And then you get to another mathematical resistance point. Then you calculate that. If you get through there, you can continue to climb. I call it break points, and you have to get through these break points. So it's never so simple to say gold is going to 8,000, or gold, that stuff sells newspapers. It gets people excited. But, I'll see how it looks when we break the old high from, August of 2021. And then I could say, all right, now we're headed to 25. Now we're headed to 3,000, or, we could come up with a new level. But that's how I like to do it. I never really like to just go out and say, hey, 5,000 is in the cards. While I certainly think it's a possibility and a fair possibility at that, it's tough to put that out there at the moment.
Yeah, no, I like that approach. Very measured, very, very patient. I want to also ask your thoughts on silver in 2022. It's pretty closely tied to gold. If you're watching gold, you're probably keeping an eye on silver as well. So what are you seeing for the white metal this year?
Yeah, so right now, I think silver has a shot to actually go up to 26 in the short term. Now, when it gets to 26, I think that's where it hits its real big resistance point where it probably needs to start to stage its decline. So my major pullback level for silver is going to be around 18. When silver gets to 18, I would back up the truck and load it up with silver, and that's when silver will have its golden moment. As you know, the two kind of trade together. They don't always trade perfectly together. Sometimes they'll diverge. But overall, I do think that silver near term heads to 26. When you get to 26, if you own it there, if you own the bullion itself, I wouldn't ever get rid of it. But if you own the paper products like the SLV or something along these ETFs, then I would probably take profits at 26 in the near term. And then I would be a big buyer, and I will be a big buyer myself when it gets to 18.
Okay, perfect. I also want to ask, as we're getting a little bit closer to the end here, we're heading into a pretty interesting time in 2022, or at least that's what it looks like. So looking beyond the precious metals, where are you seeing opportunities for the year? It could be in commodities, but it doesn't have to be, just where you're looking.
Yeah, I mean, right now I'm very bullish the dollar in the near term. I think there's an opportunity there. I think the euro's headed down to around 108, 109. So you could short euro right now. I like yields. I like bond yields to go up. I think that's the best trade right now. Yields are going to go higher. So you can own something like the TBT, or you could short the IEF, or short bonds, go anything long yield. I think that's a very, very good play. They're not going to go to 4 or 5% interest rates on the 10-year or the 30-year, but I think yields on the 10-year could go to 2.25, 2.5%. On the 30-year, I think we'll go to 2.5 to 3%. So I like the long bond. I like yields on the long bond. I think there's money to be made there, and it's not the most difficult trade. As for stocks, it's going to be tough. You're going to have to really, really pick them selectively. If you're going to be in any stocks right now, what I've been doing really since November of last year, I've been in a lot of these consumer goods names. So I think that's the place to be, where they pay a dividend, they got pricing power, they could hike the cost of goods in an inflationary environment, because we're in an inflationary environment right now. Now, it won't last forever, but it's here for the time being. And you have to get into stocks that right now that are solid companies. They have some pricing power. Technology, while there'll be bounces there, is going to be a very, very tough trade. So you want to be careful there. But overall, there'll be some shorting opportunities in there. So it's a trader's market. I love this kind of market. This is my favorite. So last year was I don't like those kind of markets where, the central banks came in and just propped up the liquidity, and that was kind of a one-way trade. This time around, we got a market again, and that's good to see, because the market's, after a big distortion and everybody leaning on the central banks, now we're starting to see that the central banks, when they can't get in there, you see what happens to this stock market, and it's good to see a tradable market again.
Okay, so going to be a little bit tough, but people have options if they can find them. Any final advice that you would share with investors for 2022?
Yes. So my word of advice to everybody is learn the charts. So because there's so many new traders in here over the past couple of years, as the central banks have distorted markets and put so much capital in the system, everything has gone up. You had all of these Robinhood traders, eToro traders. I have a nephew that's 22 years old, and he just thought the stock market always goes up. And I've been warning him, hey, this doesn't work like this. It's not a one-way street. You're just catching a liquidity wave. Well, now that liquidity wave is over, you're going to need to understand price action. You're going to need to understand pattern. You're going to need to understand charts and the way they work. Get educated on the charts. I can't stress that enough, especially for new traders, because the liquidity game is over. And when that ends, that's what we call easy money. The easy money is done. Now it's going to be tough money to be earned. You're going to have to know what you're doing. You just can't throw a dart at a dartboard and watch the market go up, because the Fed is not printing $120 billion a month anymore. And that makes it a game changer. So learn the charts, get educated. Start out with the real basics, find one pattern that you like, master it, and use that one pattern. And after that, discover another pattern and another pattern. It takes time. I've been in this business roughly 30 years now, and it's a humbling business. So, I would tell everybody, get educated on the charts.
Perfect. I think that's a great note to end on. So important to get educated. So thank you so much for coming on to talk about what's going on in the market, and of course about gold. It was great to hear from you.
Oh, it was great to be back. And again, thank you for having me so much, and have a wonderful 2022.
Oh, you too. And once again, I'm Charlotte McLeod with the Investing News Network, and this is Nick Santiago with InTheMoneyStocks.com.